Hi and welcome to Art Artist. Another day, another episode, fresh Monday. Let's see what we can expect perhaps for this week. Let's look at CBD. Let's look at the liquidity map. Let's see where's Bitcoin. Are we going to find upwards momentum before we go down, or are we starting to correct from here? Social media is calling for a dump. I see the thumbnails on some of the influencers' YouTube channels. The dump is not over. Get ready. Sell your Bitcoin. We are only starting. And let's analyze the price of Bitcoin here together. Let's go through some Elliot wave theory and look at one altcoin in particular I want to discuss, perhaps two altcoins. We'll see if we have enough time. Let's look at Bitcoin.Dominance. Smash up the like, subscribe for future notifications, and let's get the wheels going. First up, let's go through some news and see where the sentiment is at. First up, JP Morgan warns of incoming Bitcoin sell-off with anticipated 3 billion grayscale outflows. Basically, they're saying that because of the ETFs that's been launched, a lot of institutions and big money players has bought Bitcoin via grayscale, and they are potentially now withdrawing their cash so that they can go and participate in the ETFs via ARK Investment and BlackRock, whatever the case might be. So this could potentially be the momentum that's going to sell or send Bitcoin to the downside. Only time will tell. BlackRock also still on the ETF news. BlackRock now owns 1.2 billion worth of Bitcoin. Obviously, when you buy Bitcoin via an ETF, they have to have Bitcoin to back that. Okay, so it's not just like the current money system we have now, where each dollar is supposed to be backed by gold, and they just print money out of thin air. In this instance, you actually have to have Bitcoin that backs the ETFs that people are buying. And also, same, from the 9 ETFs that's been launched, 95,000 Bitcoin, which is 4 billion, is now being held by these institutions. So quite a large amount of money flowing into Bitcoin, and perhaps there's still some bullish momentum to come before we see the deeper correction. Only time will tell. We'll analyze the price of Bitcoin together in a moment. Next up, US net liquidity will teleport to 11 trillion over here, 11 trillion during 2024 and 2025. This is very bullish for the stock market. Bitcoin correlates well to the US liquidity. Yes, I agree, and tides are on the way. Okay, but that does not mean that we're going to go just up from here. Nothing just goes up in a straight line. There's always these little waves, the downwards corrections, and then the momentum to the upside. And a healthy correction is definitely needed for Bitcoin. I don't see us just blasting off from here to $100,000. We need to have a healthy cool off, which is healthy. A drop in Bitcoin is not we're going back to $10,000 and $15,000. It's a healthy correction, a 20, even a 30% drop in Bitcoin. Quite healthy and normal, as per my previous YouTube updates as well, for us to find more momentum to the upside. And quite interesting what I want to show you in my Elliot wave scenarios. So please stay tuned. Next up, trader Targiraid writes, Bitcoin daily chart has formed a falling wedge. Okay, this wedge has been pointing downwards and has stopped at a support level, which I've also identified, which is basically the value area low of the entire range, and stochastic indicators has reached the bottom. Okay, so this is potentially where people want to go long. When there's fear in the market, we're dropping, we're going down to zero or to, sorry, not zero, $15,000 or $20,000. You want to buy up the fear. So perhaps this is a buying opportunity, and also it makes risk management a lot easier when you're buying fear and when you are selling greed. Also, let's have a look at liquidity. We'll definitely have a look at liquidity to say that, well, there's definitely juicy liquidity to the upside. It doesn't really make sense just to drop from here. Perhaps one more sweep up to go and grab that liquidity for then a healthy correction to the downside really makes sense to me. And the price movement of Bitcoin is all a game of liquidity. It gravitates towards where the liquidity lies. Okay. Last up, there's also some Floki rights here, and we can go and have the Floki. We can go and have a look at the Floki chart. Floki is trending on X because Elon Musk's payments are now being accepted. So basically Floki and DOGE are having a little bit of momentum to the upside because the payments on X has now been given the go-ahead. So let's go analyze those two charts, see where we're at, and we can take it from there. That then brings us to the end of the news. Let's dive into the price of Bitcoin and just analyze what is going on here. So the one scenario that I am keeping in mind is to say that what if this is, let's entertain the scenario and just play it out. What if this is 1, 2, 3, 4, 5 to the downside? Okay, couple of ways to make sure that this wave is intact and it didn't break any of the major Elliott wave rules. And although the one thing in Elliott wave theory that I've learned, especially in Bitcoin, because it's not as mature as some of the other markets like commodities and silver and gold and the S&P 500, is that each scenario will always have a little something that doesn't make sense. It is the scenario that has the least flaws that has the higher probability. So for now, let's entertain the scenarios to say that from the all-time high that we've made up until the end of the fifth wave, if this is indeed an impulse to the downside, where we have 1, 2, 3, 4, 5, a couple of ways we can measure it. Just basic Elliott wave theory is to say, okay, at least you don't want 4 to hit the 618 or go into the territory of the first wave. So you take your fib, take it from 2 to the end of 3, and you can see we basically rejected from the 382, almost tapping the 50% fib level, but not even getting close to the 618. So valid. Okay, cool. Next up is to say, well, how do you measure the third wave target and the fifth wave target? So you take your fib, yeah, it works this time. I've been struggling with that to work, from the top of 1 to the bottom to the top, and we reverse it. Let's see what's happening over here. Okay, and you can see the third wave is not allowed to be the shortest wave. So from this fib pool that I've done over here, you can see that we did hit the 1.382, which means at least we are longer than the first wave. Also depending on where you are pulling this fib from, because I've also noticed a little bit higher when you take it to these peaks, you can see that we almost got to the 1.618, but it does look like this is an extended wave too, and I'm taking it from this fib, from this pivot over here when I work out my targets, but nonetheless it balances, it makes sense. Also then, how do you measure fifth wave target? Is to say, take it from the high of 3 to the low of 4, and I drag it across, we reverse it, and we can then see that we hit common fifth wave targets, which is the 1.236 and the 1.382. It can extend to the 1.618, but for now, valid. So this impulse to the downside looks valid. There's a couple of problems with it, which I won't all go into right now, where the fourth wave in my mind was a little bit too long, and also this fifth wave was a really, it was a weird wave in terms of how long wave 2 is compared to how long wave 4 is. You wanted to ideally see a longer fourth wave, but nonetheless, each Elliott wave scenario has its pros, its cons, things that doesn't work. But for now, we're entertaining the scenarios to say that, well, if this is indeed a 1, 2, 3, 4, 5 to the downside, you now want to see an ABC correction, so, or WXY, but we'll keep it simple for now, where we now have an A, potentially the B of the B is in, or we're going to go down lower for the B, and then a corrective structure to the upside, which is C. Okay, and all depending on where B ends, we can then go and calculate the C wave. For now, let's just go and work this out, is to say that, well, we can work out the targets based on the A wave that is formed. So we zoom in here a little bit and we go, okay, cool. Two scenarios that I'm keeping in mind. The first one is you take a normal fib. That one is now not working. Take a normal fib from the lows to the high. You drag it across. Okay. B waves generally, for me personally, are difficult waves to trade because they have so many targets. Okay, a B wave can bounce anywhere from the 382 up until a B flat targets, which is all the way down here. Okay, so it can bounce here 382, 50, 618, 786. Common B wave target is usually the 0.88. And, you know, probability wise, when you do a fib measurement and price comes down and it hits the 0.88 or lower, any recovery or move away from that target is generally considered a corrective structure. So the fact that we've bounced here on the 0.88 tells me that if we do find momentum to the upside, it confirms that this is a C wave, which is a corrective structure. So for now, we could be bouncing where we are right now, and we just need to find proof of support by looking at CBD, which we'll go through just now. Okay, let's take the brushes out the way. The other scenario that I'm keeping in mind is you take the fib out the way, and what if this is a B flat? So B flat is then from the bottom of A to the, not a normal fib, you take your fib extension. Okay, from the bottom to the top, you drag it across. Okay, B flat targets is commonly your 1.236. It's your most common B wave flat target, but it can also extend past the 1. So perhaps an SFP from this low. Okay, 1.05, also B wave target, 1.236, a more common B wave target, but also the 1.382. Okay, the 1.618, not really a common B flat target. If we do hit the 1.618 here down at the bottom, probability wise, this is then a different corrective structure. Okay, so we'll just have to go and reassess the probability from an Elliott wave perspective if we do hit this target. But for now, where price action is now is to say that, well, this is definitely an area for a bounce if we are not going to bounce from where we are right now and a little bit further down, for then a C corrective wave to the upside. Okay, so just bear with me. Let's entertain this scenario as to then say, well, depending on where the B wave is going to end, you can now go work out your C wave targets, where you then say from the bottom of A to the top of A to wherever B is going to end. So for now, this is the lowest price action that we have, and we reverse it. Cool. Now we have C wave targets, which is also 1.236 up until the 1.618. I have seen C wave targets more commonly hit the 1.618 area. Okay, let's go switch on some daily levels and just make sure that we can identify some levels of confluence. Okay, also let's put on some weekly levels. Now that I've got my daily and my weekly levels and my point of control levels all marked out, now I can go and check out, well, where's the levels of confluence that I can trade if we get there, because I don't trade Elliott waves. It's another layer of confluence that I use together with other levels of confluence. Okay, so if I have to tick 8 or 10 boxes before I enter a trade, or 3 or 4 boxes before I enter a trade, Elliott wave scenario is just one of those boxes. And then I need to look for proof of support, and then you need to have an area of confluence. So, you know, just a little bit from a trading perspective. If you want to know more about trading, let's just go in here. First up is, if you have not seen my Bitcoin investment strategy, not a trading strategy, an investment strategy where you can stay profitable instead of having diamond hands, make a lot more profit with your hodl bags, please go and check out this video. I will leave a link at the end of the video on top of me, so you can click on that and go check out this video. Very good Bitcoin trading strategy, and extremely profitable as well. So please go check that out. And then also, if you'd like to trade with me, you don't have an exchange, or you don't have Bybit, BingX, or Mexi, and you would love to trade with me, please go and use my affiliate links. It's your ways also to support the channel, and it costs you nothing. And for our community, where myself and my colleague post daily updates in terms of analysis, levels of confluence, trading setups, you can go and join our Discord community by clicking on this link. I think there's also a 25% discount at the moment. So yeah, please go and sign up, and we can all trade together. Okay, let's go back to price action. Okay, so this is basically the scenario that I'm looking at, to say that, well, we have to wait for the B wave to be in order to calculate where the C wave can take us. But for now, if I want to trade the B expansive target, which is here by the 1.236, we do have a naked weekly and a daily level over here. Okay, where the 1.236 is just a little bit down, where you want to see price come down, perhaps weak, for acceptance back above this level for a long entry to the upside to go and complete the C wave. Okay, then depending, or we can turn around from where we are right now, and then you want to see proof of support. So looking at, let's go back to liquidity. We'll discuss liquidity just now. Looking at CVD at the moment, in my opinion, one of the best indicators out there. It's the only indicator that I use because of its reliability and real-time information. Okay, so looking on the 15 minutes, what do we see over here? Okay, so if I look here on the 50-minute, I'm spotting some bullish CVD. Bullish CVD is higher low in price, higher low, and lower low on CVD. Okay, so definitely some bullish CVD. And then the highest pivot between the 2 points is your target, okay, which is this little pivot over here. If you're a CVD trader, and some of the CVD traders out there, this is typically a strategy that they'll use, obviously with good risk management and some other rules that they follow around it as well, is to say that, well, you have bullish CVD and your target is this high. So we have to acknowledge that we do have bullish CVD, not so much on yellow. We did build bearish CVD. If you look at this pivot, okay, higher high on CVD and lower price action on these two pivots. And then you go between the two pivots. So these lows were the target, and it already played out. So this bearish CVD is now neutralized, and we now need to go and work on fresh CVD. Then what I like to do is I go into the 5-minute. Okay, and then we see, okay, so this little pivot that we made over here, ideally for proof of support, I want to see us make bullish CVD before we reach this pivot. Otherwise, we're just going to invalidate it. So if this price action has to come past this low, then the bullish CVD is invalidated. Okay, so proof of support is CVD needs to move past this point before price action gets there. So you want to see, grab my little line over there, you want to see higher high on price action and lower low on CVD. And that would be your proof of support that we are potentially moving to higher levels. For now, it's still neutral. Okay, cool. Going back to price action, let's just take the scribble out the way. So these are basically the scenarios that I'm watching, is to say that we can turn around anywhere in this area where we are right now. Okay, for a B flat target to go and complete the C wave to the upside. And the C wave target you can work out only once your B wave is in and completed. And then if we do turn around here for momentum to the upside, we have a daily level. We have a point of control, which is just above the 1.618, where you can have a scenario where you find strength to the upside, you wick into this level, and then the SFP down back below the 1.618. Also, the daily level, definitely an important level. Any acceptance back below the daily level will definitely highlight more downside to come. So that's basically it from a trading perspective. What I'm also looking at, let's just take all the fibs out the way, clean this up a little bit, is when I zoom in, this could potentially, this entire structure could potentially be the formation of a bigger wave 1 to the downside, where you will now see this happening, where this is now a 1, and we are going to go up potentially here to create a wave 2, and then 3, 4, 5 to the downside. Okay, so it does look like impulses could be changing momentum now, where it used to be to the upside and you have corrective structures to the downside and you continue in the bullish momentum. It looks like this could be a turning point where we are now going to start making impulses to the downside. So depending on where wave 2 ends, if we do come up here for a C corrective structure, we can then start working out where the third wave target and the fifth wave targets are going to be, and what would invalidate a wave 4, and so on. But for now, these are basically the scenarios that I'm watching, is to say that this potential corrective structure to the upside could be the start of a bigger impulse to the downside. Okay, what else? Let's look at Dogecoin. Okay, Dogecoin looking very strong compared to some of the altcoins that's bleeding a little bit. I had a look at some, I think it was Solana and Rune, and I see that, breaking trend, falling to the downside. We don't have time to go through all those at the moment. And the reason I'm looking at Doge is, as per the news, from an X perspective, they're now receiving payments, and perhaps Dogecoin will be the one that's being used. And you can see I've been tracking this momentum line and this momentum line. So this one we broke through successfully with high green volume coming in, and perhaps this is now a beautiful retest for continuation to the upside. Okay, I just want to take a flip. Let's see where we are. Flip from the bottom to the top, and we bounced here perfectly on a support which is above these highs over here. And for bullish momentum to continue, you don't really want to see us close candles below the 786. So we still can go a little bit lower to the 786 for continuation to the upside. But for strong bullish momentum to remain to the upside, ideally you want to see us bounce where we are bouncing right now. Okay. That is basically it from my side. Let's look at Bitcoin dominance quickly. Okay. Dominance looking strong at the moment. We have broken up from this resistance and the support that I had over here, potentially forming that that bearish flag for continuation to the downside. And now it looks like we are flipping this resistance into support. But also considering we had a deviation here, we got acceptance back inside of this level. So could this be a deviation for then further continuation to the downside to give Doge, for example, and Ethereum and some of the altcoins still the strength to have that momentum to the upside? Okay, but for now, dominance is in the favor of Bitcoin, which means the altcoins are going to struggle a little bit. What else? ETH over BTC. I had a look at this here on the 4-hour. You can see that trend line that I've been talking about in a couple of my updates. We broke through with high volume. We formed a bull flag. We've now currently lost the bull flag and we're breaking to the downside. Ideally, you want to see us bounce here on the 236 and the 382 for that beautiful retest potentially, where you break out, you consolidate, you come back for a retest for continuation to the upside, or we could bounce here for continuation to the upside. You do not really want to see us come back into the trend, because that could mean that Ethereum is going to potentially bleed a lot harder than Bitcoin if there's a correction on the cards. That is basically it from my side. If you enjoyed the content, please smash up the like and subscribe to the channel for future updates. Until the next one, cheers for now.